Amazing with this particular machine learning model is when you apply it to crude oil, for example, it works even better than the S&P.
Really?
When you apply it to large cap stocks, it works very well. So the same type of learning model applied to media data works across assets.
Well, that oil's a great topic because I mean, internally we have to, so I'm still stuck in this spot where I don't have your machine learning, but I have to deal with the noise. So oil, great topic because it's either freeze or no freeze. And then I get our energy policy analyst in Washington, Joe McMoneagle's like, well, I don't think that there's going to be a freeze.
Right.
So the market's always constantly back and forth, but it's so mean reverting. And if you look at oil in the last 3 to 6 months, it's really just done a lot of chop.
Right.
Chopped everybody up. Oil volatility's, I think today is at 40 or 42.
Oh yeah.
You know, so what do you see when you see oil? Do you think that it's wonderful, or do you do well with it?
Well, the model does. So that's a great question. So monitoring sentiment in oil is very difficult because you have the consumers and the producers.
Yes.
And one's happy when the other's sad, and vice versa, right? So when we monitor text, you know, we have to know, is it the South Dakota Times, you know, and they're depressed, or the Dallas Morning News is sad about oil prices going down, but then the Sacramento Bee is happy, you know. So yeah, you have to figure out where it's coming from, and that's challenging. So we find with currencies and commodities that a better metric of sentiment is where people say the price is going.
Oh, really?
People talking their book, basically.
Oh, okay.
So the more that they talk in one direction, if you create, say, 2 moving averages and you cross them over on crude oil, since we found this back in 2014, right before the crash started, and it has been almost 100% accurate in catching every major monthly move.
Really?
Just the crisscrossing of where people say it's going is where it tends to go. So the chatter in the media seems to be, I mean, maybe not driving it, but certainly people are talking their book and then they're acting on it.
Yeah, well, when you think about standard deviations of risk or any kind of measurable risk range of a price that's really just trading in a range.
Right.
I mean, it's only natural to believe that when on the way down, you're going to hear everyone say, I nailed it, and I think it's going to go even lower. And
true.
when it's up, they're going to do the opposite. So isn't that just it? People just talking their book after the move?
Well, no, this is before the move.
Before the move, you're saying?
That's what's interesting. Yeah, this is...
Oh, I thought you meant after the move.
No, this
they
is
talk their book.
This is the chatter that precedes the move. So people are saying,
Wow.
I think it's going down, or it's going down, and the more they talk like that, the more it goes down.
That's
and then they
super
reverse and they start to say, well, actually it might be going up now, and it actually goes up.
Wow.
So somebody is, you know, the bulk of people is actually accurately talking up crude oil and down crude oil.